One of the most common mistakes I see trade business owners fall victim to when trying to make more money in their business is actually making decisions solely based off what they're seeing on their profit and loss statement, which might sound really counterintuitive, but bear with me because this is something that I'm seeing all the time. And so I'm shooting this quick video today to break down exactly what not to do with your profit and loss statement if you are running a trade business and you are wanting to make more money. For those of you who don't know me, my name is Bayley Peachey. I'm a client advisor here at Trade Business Accountants, and we work with trade and construction businesses typically turning anywhere between $1 and $20 million a year to help them build greater security in their business and dramatically increase their profits in cash. Let's get stuck in. Okay, so first things first, let's reset your thinking. If you want to earn more money, you don't necessarily want more profit. You actually want more cash because cash is what's left over for you to enjoy after everything else has happened in your business. So this means to earn more money, you need to know how to earn more cash, which is why you cannot make decisions solely based on what your profit and loss statement is telling you, because the profit and loss statement actually tells you nothing about cash. You know, oftentimes cash comes in, cash goes out, and then business owners are left wondering why the profit on their P&L doesn't actually reflect what's in their bank account. And this is because what they're looking at is called your paper-based profit. It's not cash in the bank. And one of my favorite sayings is revenue is vanity, profit is sanity, cash is reality. There is a massive, massive difference between profit and cash. Profit is the result of your profit and loss statement, and cash is the result of your business. So the profit and loss will not tell you how your business is really going because there just isn't enough information. All it gives you is the sales minus the expenses you've incurred and the paper profit that's left over. So nothing about your assets purchased or how much money you're owed or when you're paying your suppliers, works in progress, directors loans, which all have a real dollar cost attached to them that do affect your cash. So to get the full picture of your business and really your money, you also need to understand your balance sheet. But this is where people can find themselves getting stuck. And for many business owners that I speak with, the balance sheet tends to come across as more complicated than the profit and loss statement. But you have to understand it because profit on paper doesn't pay bills, cash does. So my goal right now is to make this really, really simple. So if you want to earn more money, cash is the key. And to understand your cash, you really need to see it as a story that is told over 4 chapters. Chapter 1 is net profit minus working capital invested minus other capital invested equals your cash. Now, if you're not quite sure what any of this means, bear with me. I'm going to break this down one step at a time, starting with chapter 1. Chapter 1 is net profit. So the profit that your business makes after every cost has been factored in, which is typically the figure sitting at the bottom of your profit and loss statement. This is where I see most trade business owners living. They use their P&L to understand how things are going and how healthy their business really is. But if this is you and you are only living in chapter 1 of your story, then I promise you, your profit and loss is lying to you, because understanding the cash in your business is just like reading a murder mystery. You cannot read chapter 1 of the book and then just expect to uncover who the murderer is, because that's all discussed at the end, right? So if you want to understand what's really going on, then you have to read the whole story. And the same is true for your cash. You have to read all 4 chapters, not just chapter 1, net profit. So net profit minus working capital minus other capital then equals your cash. Revenue might be growing, margins might be up, profit could even be increasing, but this does not tell you how much cash you've made. You have to understand the entire story. And to prove this, I'll run you through an example of a TBA client that, for privacy reasons, I've obviously renamed here to ABC Plumbing. But in the year before working with us, they had grown their revenue by 17%, going from $3.5 to $4.2 million. Their operating profit had grown by 19%, going from $375,000 to $462,000, and net profit had just exploded by 21%, going from $165,000 to $208,000, which from a profit and loss chapter 1 perspective looks great, right? Business is good. But looking at these financials from a cash perspective, not just paper-based profit, which I'm talking about, how did they go? How much cash was made? Despite what the profit and loss was telling them, they actually lost over $326,000 in cash, right? And I'll show you why. Chapter 1 net profit in this instance was $208,000, which is found at the bottom of their profit and loss statement, as you can see here. And looking back at the 4 chapters now, this is how this sits into the equation. So you can also see that it's sitting in the left-hand column that positively affects their cash flow. And this is because increases in profitability, they tend to have a positive effect on cash flow of the business. So generally speaking, the more profit you make, assuming you're collecting all of it, the more cash you're going to generate. Next is chapter 2, working capital invested. So working capital is simply the amount of cash that you need to run your business over the short term. There's a lot of definitions online, very complicated accounting jargon that is as simple as I could possibly explain it. Just how much cash do you need to run your business over the short term? Over the short term typically means within a year, right? So across the year, how much money do you need to run your business? And this is where the balance sheet comes in. So there's a lot going on here, especially considering we've just been looking at the profit and loss statement. It's a little bit more complicated, but out of everything listed in the balance sheet, there are only 3 line items that you need to worry about when it comes to working capital. And these are accounts receivables, your works in progress or stock, and your accounts payables. So accounts receivables, again, just a fancy word that accountants like to use to explain the money owed to you from your customers. WIP, or works in progress, are the work that you've done at your expense, but you have not yet invoiced for it. And then stock is pretty similar to this. It's just the supplies that you have on hand that haven't quite, like you've purchased them, but they haven't been allocated to a job to then be invoiced yet. And then finally, accounts payable, which is the money that you owe to your suppliers. So these 3 line items, they're known as working capital because they determine how much cash is needed to run your business over the short term. And they largely dictate how much cash is actually coming in and going out of your business. Now for chapter 2, what we want to do is calculate the working capital invested this year on top of last year, because this is going to show us that if any profit we made this year was used to fund any increases in the working capital from the year before. So to do this, the formula is difference in accounts receivable. So that's the difference between 2020 and 2021 in this instance, plus the difference in WIP or stock minus the difference in accounts payable to then equal your working capital invested. So if we look back at this balance sheet, accounts receivable has increased by $191,000. That is $863,000 minus $671,000 equals $191,000. WIP or stock has increased by $395,000, and then accounts payable has increased by $152,000. So all up, this means that the business has invested an extra $434,000 into working capital in 2021 compared to the prior year in 2020. So what this really means is that the amount of money that this company, ABC Plumbing, has required to run their operations has increased by almost $500,000. So looking back now at our 4 chapters again, this is where working capital then sits, right? This is how it fits into the overall equation. And you might also notice here that a little bit different to net profit, it's actually sitting in the right-hand column that negatively affects your cash flow. And this is because, kind of what I was alluding to, but the more working capital that you have, the more cash your business needs to fund its operations. Now, if this is getting a little hard to follow, just bear with me. It'll all make perfect sense in a moment as we get through the remaining chapters. So just bear with me. But once we calculate working capital, we then arrive to chapter 3. So this is where we need to determine if there's been any increases in what's called other capital. Now, again, the balance sheet can appear a little bit more complicated than the profit and loss statement, but to make the balance sheet simple, anything outside of working capital, we're just going to call other capital. So these are complicated accounting terms like accruals, repayments, provisions, deferred tax, other current assets and liabilities and all these sort of things, but they have very little to do with the management of your business. So I don't want you to worry too much about these. Just leave it for your accountant. And what we're going to do is just group them as other capital, right? To simplify things. So to calculate your other capital, we again need to go back to the balance sheet. Here we look at the difference in equity plus the difference in debt. So equity is really just the value that would be returned to any shareholders. So this might just be you or your partner, or it could be multiple people, but any shareholders if all of the assets were sold and all of the company's debts were paid off, right? And then debt represents the value in a business that is owed to creditors like your banks. So the combination of these two really represents the total increase in funding or capital in the business in 2021 that was used to fund the increasing costs of operations in 2021. So again, if that's a little bit tricky to follow, it will all make sense in a moment. So by subtracting the working capital figure from this total, we can then calculate the leftover, which is the other capital invested in 2021 in this instance. So all up, the formula for other capital looks like this. You've got the difference in equity plus the difference in debt minus the working capital invested, then equals your other capital invested. So back to our balance sheet. Equity has increased by $208,000. The combination of short and long-term debt has increased by $326,000. That means that all up, once we subtract the working capital amount of $434,000 that we just calculated, the business has invested an extra $100,000 in other capital in 2021. So looking back now at our 4 chapters again, this is where other capital sits into the equation. So you can see here that, again, it is also sitting in the right-hand column that negatively affects your cash flow. And this is because just like working capital, the more you invest in other capital, the more cash that is getting drained from your bank account to fund your operations. Which brings me to the final chapter of our 4-chapter story, the result of your business, cash. This is what really matters. So the money that is left over after everything else has happened. To calculate your cash, all we need to do is now revisit the original formula. So chapter 1 minus chapter 2 minus chapter 3 then equals chapter 4, your cash. So in this example, as I said, after making $208,000 in net profit, a massive spike in profits from ABC Plumbing, they had actually still lost over $326,000 in cash, which hopefully proves just how important understanding the entire story of your numbers actually is. So if our client in this instance were to continue just living within their profit and loss statement and focusing on what chapter 1 was telling them, they would have been fooled into thinking that business was great. But at the same time, they wouldn't have known where all of their money was going every single year, and things could have gotten much, much worse, right? So while chapter 1 net profit in this case was up $280,000, we had to read the entire story to get the full picture of their cash and just how much they were really earning. Cash is what matters most in your business. It is the only fact in your business, the only thing that matters, what is left over for you to enjoy at the end of the day. You cannot afford to only make decisions solely based off what your profit and loss statement is telling you, because it is only one chapter in the 4-chapter story of your numbers. If you choose to live within chapter 1 and only focus on what you are seeing on your profit and loss statement, you will be fooled into thinking business is great. You cannot afford to do that. Cash is what matters most in your business. So I hope you found this video helpful. For many of you listening, this might have been some fairly new concepts that you might not have heard of before. But I promise you, if you want to increase your income, you want to earn more money, understanding this is critical. And if you get your head around it, it will change the way that you operate in your business forever. Now, if you'd like to see more on this topic, I've actually just launched a brand new masterclass where I take the time to run through, exactly how all of this works in step-by-step detail with real client case studies. And I give you a whole bunch of actionable strategies that you can use to skyrocket your cash in your business pretty much straight away. And I even throw in a bunch of exclusive free bonuses. So if that interests you, drop a comment below or check out the link in the caption. This masterclass, it's really inexpensive. It's only $97. And we even have a 30% off early bird offer also in the caption to help celebrate the launch. So jump on that if you are interested. You will not regret it. There's a money back guarantee. But again, it's $100. I promise you, if you want to make more money, this is the training for you. It's completely tailored to trade and construction businesses. And it is free of any ridiculous accounting jargon, super simple, heaps of examples, and just, again, massive amount of actionable strategies to implement pretty much straight away. And it is a game changer for any serious business owner looking to do better. Again, so jump on that if you are interested. So I hope this video has helped. Be sure to like, follow, or subscribe for more training released every single week. And I'll see you on the next one.